to make this comprehensive for all the members, we requested Mr. Rohit Jain and Asha from ALP, who've always been our partners as far as any representation for GST is concerned, to come and give a small presentation. So it's comprehensive and we all understand that this real judgment. I know a lot of this WhatsApp University was making all of us feel good that GST on development agreements is gone. We all started celebrating in our own way. But the fact, if some of you were there during the press briefing, must have heard, that's not the case. I hate to be the guy to burst the bubble, but the fact is that nothing has changed on the ground. So I'm going to request Rohit and Harsh both, they prepare a comprehensive presentation so they take you through, and then post that we can have questions so that we can give more clarity. Over to you, Rohit.
Thank you, Sunny. Thank you, CREDAI and MCHI. You can hear me, right?
Yes.
Yeah. So, hello. So, as Sunny said, that there have been a lot of news article, media reports in relation to applicability of GST on the development rights. Moreover, as a developer, it has become added a fuel to already a huge problems that we have, because every society members or every landowner feels that there is no GST on this, and why are you recovering from me? Why are you asking us to pay the GST, so on and so forth. What we have done together now today is that we have put together recent developments in the context of GST, all those judgments which have come through in last maybe 6 months or so, and we have brought to your notice today that all of this, and realistically where do we really stand in relation to those judgments. We all know that redevelopment is, of course, is the boom, and lot of focus has been on the redevelopment, rightly so. Except giving the tax relief, all other focus has been just been there. Hopefully we will also get a tax relief sooner than later. First and the foremost, we believe that any GST implication should not be looked at it only from a perspective of tax. Anything that we deal with, we have to look at it from this four perspective. First, of course, MRTP Act, which is the parent regulation. Second, we have a RERA, also we have to look at that. Next, we have a Maharashtra Cooperative Societies Act. Extremely relevant because under Maharashtra Societies Act, we have that concept of trust be and whatever, because all the societies and the land are owned by the society, and members have been only allowed to stay in the society as the members. They don't own that flat or the residential apartment. Having said that, there is always therefore a confusion that I am selling the flat, I am doing this, where is the question of GST on that, and all of these issues come up. We have to look at those provisions also, which is under the Society Act. And the last is the tax laws, be it income tax, be it GST, be it stamp duty. I'll give you one classic example, how there have been a contradictory positions being taken under the tax laws itself. Let's look at it, income tax and GST. We have a section called section 50C under the Income Tax Act, which says that when you sell a land and a building, you cannot sell below the market value. Under the income tax, we also have 43CA, that whenever as a developer selling the apartment, you cannot sell below the reckoner price, right? When it comes to a transfer of development rights, what all have been arguing, including we have got a favorable judgments from Tribunal and High Court, that neither section 50C nor section 43CA applicable. Why? Because 50C is applicable only to land and a building. Development rights is neither land nor a building. Therefore, why you are making 50C applicable? I can transfer the development rights at whatever price I want to transfer. That is what our arguments have been under the Income Tax Act, right? Let's look at it GST. When it comes to GST, we have a definition of goods and services, and it comes up there that goods is any movable property, services means anything other than movable property, and we have a schedule 3 which says that sale of a land is not considered to be supply of goods and services. What I have been arguing under GST, I have seen those submissions. When there is a transfer of development right, it is nothing but sale of land. How? When it comes to income tax, we say no, it is not sale of land. It is something, not a land per se, it is a development rights. It is not land. But when it comes to GST, we say no, look at the transaction. Ultimately, whenever there is a transfer of development rights happening, there is also sale of land. Therefore, it is nothing but sale of land. The point which I am trying to make it is, we have to take a comprehensive and a consistent position. We can't be taking up the position what is convenient to the tax laws of that particular nature. I can tell you today, at ELP we are doing so many matters, and the sharing of information amongst the tax authorities, amongst the regulators is at a different level. What you tell to RERA is aware of the income tax and the stamp duty and the GST guys. What you make submissions to a stamp duty is also being aware of everybody. What you tell to your corporation is also aware of these guys. Everything, the data, the responses, the documents being shared amongst the regulators quite regularly today. Therefore, believe me, the first point that we wanted to make before we get to the actual implication of the judgment is that don't take unilateral, don't take a position which is not tick mark for all the provisions that we have seen, and that's the thing that I wanted to start with, that anything that we do should be looked at it cohesively and comprehensively from all perspectives, and are we aligning our position in law across all these regulations. That's the first starting point. Having said that, let's look at it a joint development and a redevelopment transaction. We all know that there is a society or landowner who is giving development rights. Developer is either giving monetary consideration, which is a revenue share, or we have a non-monetary consideration, constructed units, which is area share. Society landowners, if it is a landowner, they are also selling the flats. If it's a society, the existing members or a self, they are getting the flat, albeit with the additional area, which is 1000 to 1300, whatever is that area we are getting. And the developer sells the free sale units to a developer. Whenever we get the first query to our office, now of course it has stopped. First thing that developer comes back or a society members come back, oh, I am getting this free of cost. There is no question of GST. I am not paying a single rupee. I am getting this, my existing new flat free of cost. Landowner says, I am getting this free of cost. Why on a free transaction there is a GST being paid? First and the foremost is, in the commercial world there is nothing called free. Right? Let's be hand on heart, it is not free at all. It is for the purpose of giving you your development rights, you are getting in turn the area, and therefore that transfer of development rights is a non-monetary consideration, and therefore whether it is a consideration in a monetary form or a non-monetary form, GST is payable. So the first and the foremost, that it is free of cost, free of cost. I am also getting free of cost development rights because I am only giving area to them. they are not paying me anything, or they are giving me development rights free of cost. Nothing called free of cost. And GST law recognizes that the non-monetary consideration is also consideration. Having said that, let's examine the GST law provisions now. And then we get to the 5 important judgments which have come in, which has gone in media, like absolutely viral, I can tell you. Whether it's for real estate developer or whether it's for the members or the person who are buying the flat. One thing is absolutely clear, that this transaction where developer is selling the unit, be it residential unit. You can hear me, right? Right? The mic is being on. The developer is selling the residential units prior to OC. There is a 5% GST payable. This transaction today is not in dispute. It is not pending in any of the court. It is not to be examined from any perspective. It is a simple transaction. If I am selling the unit pre-OC, be it residential, be it commercial, there is a 5% or a 12% as the case may be, GST is applicable. There is zero question on that. So this leg of a transaction is absolutely no difficulty. The real issue is about this leg of a transaction and this leg of a transaction. Transaction number 1 and transaction number 2. Transaction number 1, which is the transaction from the transfer of development rights. Is it liable to GST or not is the core issue. The issue here is that these development rights are the rights arising out of land. If these are rights arising out of land, under the Transfer of Property Act, this is considered as an immovable property. If this is an immovable property, in the first place, can GST be payable on sale of an immovable property? We all understand GST is a transaction in goods or service. How can there in the first place GST on a sale of an immovable property? This is the first and a fundamental legal ground in a constitutional challenge that we have taken, and various petitions being filed before the High Court, and the matter is currently pending before the High Courts. At ELP we have filed this petition at least in 5 High Courts, and all the cases have been pending at either at the stay stage or at an admission stage. No definitive ruling has been issued till date on this one fundamental ground of challenge, that it is nothing but a sale of an immovable property. Can there be a GST on a sale of an immovable property? So the transaction number 1 is a transaction which is under the challenge before the High Court. Second, what does the GST law says? GST law says that landowner transferring development rights after 1st of April 2019, keep this date in mind because we have so many cases which are going on that I have transferred pre, area is given after. I have transferred pre-GST, area is given after. I have transferred pre-19, area is given after. I have given both pre-post-19, area is also given post-19. How do I deal with this transaction? There are a lot of permutations and combinations we have to deal with case by case. There is no universal formula. We have to deal with extremely sensitively, carefully in each fact profile. Now, let's look at a transaction. I am entering into a redevelopment agreement or a JDA after 1st of April 2019. After 1st of April, when I enter into JDA or a development agreement, as per the GST law, this transaction is liable to a GST as a supply of a service, first. Second, this transaction is liable to be paid under reverse charge mechanism by the developer. Third, there is an exemption available only to the extent of these transactions and these transactions what are happening pre-OC. That means, assuming in our example, I am developing a society of 20,000 square feet. This is say, just for the sake of discussion, 10,000. And I am selling 3,000 pre-OC and 7,000 is remaining to be sold after OC. Then 7,000 divided by 20,000, which is the proportionate to that, there is a GST payable under reverse charge mechanism by the developer as we speak today. Okay, so that is on the first leg of a transaction. On the second leg of a transaction, what is the fundamental issue? There are two fundamental issues that have been taken before the high courts, which are again pending for discussion or decision, I would put it. First is, this leg of a transaction ideally should not be liable to tax at all. Why? Because the cost of this leg of a transaction is subsumed in this transaction, right? Therefore, how are you taxing these transactions independently? So that's the one of the fundamental issue which is pending. Not only the High Court, it is pending before Supreme Court in the matter of Vasanta Green. A judgment of Vasanta Green, which was prior to GST regime, is currently pending before Supreme Court. That's one fundamental issue. The second fundamental issue is that when I am giving this to a society or a landowner, am I really providing a construction services or am I providing a works contract services? Because construction services are liable to 5% GST without ITC to me, or works contract services are liable to 18% GST with corresponding ITC to me. And therefore, the another issue is that value of the services that I am providing by way of an area given to the landowner or the societies should not be taxed as if it's a sale unit. It should be taxed only on the construction cost. Law says that you have to pay 5% GST at a value nearest to the value at which you have sold any unit to this buyer on the nearest the date on the signing of a redevelopment agreement or a JDA. That's the law says. Now, this is what the legal provisions are. Now let's look at it, how the courts have been deciding this issue today. Now, first issue is this Nagpur bench of the judgment on case of Srinivasa Real Call. Now read this one para which we have detailed here, and you yourself will understand how this has got it so wrong. So wrong. Read this para with me carefully. A perusal of the language of entry 5B. Entry 5B is what? Entry 5B is for who is liable to pay under reverse charge or forward charge. Services supplied by any person by way of a transfer of development rights for construction of a project by a promoter. Supplier of service is any person, recipient of service is a promoter, and therefore GST is payable under reverse charge mechanism by the promoter. This is what the entry 5B. You all understand now very clearly Can entry 5B decide taxability at all? What does entry 5B deciding? That who is liable to pay tax? And now read in this context the High Court findings and you would realize that how High Court got this so wrong. Now read High Court findings. A perusal of language of entry 5B above, 5B, that we have just read it, would indicate that it relates to services which can be said to be supplied, by way of a transfer of development rights or FSI, including additional FSI for construction of a project by a promoter. The expression transfer of development rights read in conjunction with FSI as indicated in entry 5B would only relate to a TDR, which is transferable development rights. Is it correct? Do we understand? Is this correct? A transfer of development rights is a transfer of development rights. It does not mean the TDR definition, which is transferable development rights under the UDCR. Nothing to do with that. How can we relate this to say that this TDR would mean that TDR? And now read it further. As contemplated by clause 11.2 under the regulation of TDR under UDCR for the state of Maharashtra, which defines transferable development rights which shall entitle the owner for construction of a build-up area subject to the regulation. It therefore follows that the TDR FSI as contemplated by entry 5B, which is only for reverse charge, cannot be related to the rights which a developer derives from the owner under the agreement of development for construction of a building for the owners, in lieu of the owner agreeing to permit the developer to transfer certain built-up units for consideration to appropriated by the developer, and therefore there is no GST payable. Do we agree with this finding? Let's look at it practically, the consequence of this. And I will explain, you will be shocked if you want to follow this judgment. First, it is not a transfer of development rights as a concept, it is transferable development rights, which is a completely distinct concept than the transfer of development right. Second, if we literally read that this is not something covered, that what is the High Court saying? That inherent FSI that I have from the land is not like a TDR, which is right, we all understand that. And therefore when I give inherent FSI, a transfer of development right to my developer, then this entry is not applicable. If we look at it logically, that means today we all enjoy the exemption, right? If I sell everything pre-OC, that exemption will also be not available then. Can you imagine the impact? Because that also language is exactly the same. Transfer of development rights post 1/4/2019 to the extent of flats sold pre-OC. There is no GST payable. As soon as we say that the transfer of inherent FSI or development rights is not covered by this notification, that means that exemption is also goes. And we are liable to pay GST on every TDR or every development right agreement which is entered even after 1st April 2019. Is that the intention? And third, which is the one of the biggest consequence, yes, 5B may not be applicable, then it will become a forward charge. Societies will be liable to pay. What is so big deal? So this judgment of High Court is got absolutely wrong. They have not comprehensively understood all the GST provisions, and therefore if anybody arguing and wanting to take a benefit of this judgment, I think we need to be extremely cautious. Ideally no one should rely upon that judgment because it has a huge consequences of exemption is also gone, which is the biggest relief that we have got after 1st of April 2019. Imagine that exemption is going. I am paying 18% and in turn I am paying 5% on my sale units without any ITC. Can you imagine the impact? So therefore, this judgment which is gone all over the social media, as Sani rightly said, a WhatsApp university, it has to be looked at as only as a social media, all the news which transpired. There is nothing in terms of the real relevance of this judgment. This is first judgment. This is very interesting judgment of Telangana High Court, which has come in 2016. And this is extremely interesting because they have looked at it, this provision, exactly the way we would like to look at it from a GST authority's perspective. Read this now. On co-joint reading of the clauses under GST, a JDA, it will clearly indicate that there is an automatic transfer of ownership given to the petitioner at the execution of JDA. That until the completion of the project takes place, the petitioner does not get any right on the said property. It is only after the completion of the project, issuance of completion certificate, petitioner derives the right to sell the area, which money invested by him in the court. Thus, as has been held earlier, under no circumstances can the execution of JDA or mere transfer of development rights or nor any clauses of JDA indicate an automatic transfer of ownership or title in the land belonging to the landowner in favor of the petitioner. In absence of cognate and substantial material to establish right title ownership in favor of the petitioner, the transfer of development rights as it stands is amenable to GST and cannot be brought under the purview of entry number 5 of the Schedule 3. So they clearly distinguish that transfer of development rights is a distinct species of a transaction than the sale of land. However, one aspect which has not been examined by Telangana High Court, that it is still an immovable property, and immovable property cannot be taxed for the purpose of GST, and that issue is still pending. Next, extremely important judgment, and which is the real judgment that we should really wait the outcome of, is the judgment of Bombay High Court, Bombay Bench, in case of a Nirmal Lifestyle Developers, where before the judgment, we would like to take up the judgment of Gujarat High Court on a transfer of leasehold rights. Assignment of leasehold rights, Gujarat High Court has held clearly that this is the transaction ideally should not be liable to GST because assignment of leasehold rights is like a equivalent to assignment of ownership in a land, and it is not liable to GST. Extremely important judgment, and this is the judgment that we all should really look at it, because Gujarat High Court has gone through all those GIDC agreements, which is equivalent to a MIDC also. On behalf of Small Industries Association and COSAI, and there are other bodies, we have filed the petitions in Bombay High Court exactly on the similar lines, that assignment of a leasehold rights also is nothing but assignments of rights in land, which is a transaction of immovable property and should not be liable to GST. This is an excellent judgment of Gujarat High Court, which has taken a concrete position that this transaction should not be liable to GST. But on the similar ground, we have the Nirmal Lifestyle Developer judgment. In case of development rights per se, it is an interim order. Interim order. It is still not attained the finality. It is an interim order where, as far as interim reliefs are concerned, mark these words. These are only interim relief. Justice Kulabawala, when dealing with this issue, was extremely categorical. And read this. It's an excellent finding, I can tell you, even if it's an interim finding. What does it say? that was raised before a Gujarat High Court is okay, and assignment of lease would fall under schedule. The Gujarat High Court in fact took a view that assignment by the original lessee to a third party would not fall within the Schedule 2 and hence would not be taxable under the GST. Gujarat High Court came to the conclusion that the assignment was actually a transfer of immovable property. This is what we have been arguing, and hence not exigible to GST. In the present case, in fact, it is the case of petitioner that there is no transfer at all, but even if one would assume that there is a transfer, the same would be of immovable property and not taxable under the GST law. This is what the finding that we want eventually to be held at the final hearing. The transfer of development rights is nothing but a transfer of immovable property, because we also pay stamp duty as if it's a transfer of immovable property. Therefore, it should be considered as transfer of immovable property and there should not be any GST. So the Gujarat High Court judgment and Nirmal Lifestyle, eventually a final outcome, and all other petitions that we have filed are the most definitive ruling that we all should be really look after, and this will settle the law permanently for us, whether on the first leg of a transaction, which is on the transfer of development rights, whether there will be a GST or not. I think this is where we should be really look at it. On the area handed over to which is a second leg of a transaction, we all know that this is a Vasanta Green Projects judgment, which is under the service tax era, currently pending at Supreme Court. This outcome will decide the taxability of a second leg of a transaction, which is the area which is handed over by developer to the landowner or by developer to the members, and that will decide the taxability of a transaction. One last judgment that we intend to cover today is the mutuality as a concept between the society and the members. Is there a transaction per se between society and the members? We have got one Kolkata High Court judgment. Thereafter, this is now been overturned by Kerala High Court. And Kerala High Court has looked at it, the amendment in the GST law, and have took a view that even after the amendment, inter se between society and members, there should not be any GST applicable. So therefore, these are most relevant judgments that we should be really looking forward. What are the legal arguments available to us today on the non-taxability of transaction number 1 and transaction number 2? First, it is an immovable property. This is what the High Court is looking at even today. This is where we all should be really focusing upon, that it is an immovable property. Second, it is a double taxation, because my area is already included in the sale of flat. It is a double taxation. Joint venture arrangement, very very interesting argument that we have taken, that in case of a JDA, in case of a redevelopment, it is jointly developed. It is like a revenue share arrangement between me and my landowner, and both of us collectively providing services to the customer. Inter se there is no rendition of service. Both of us inter se are not rendering services to each other. And that is also a good argument. We have got a good favorable judgment in other cases like port revenue share, multiplex revenue share. So this is the argument that we have also developed. And a last transaction, that in one transaction, there cannot be the person is supplying services and also receiving services. How can that be a scenario? These are the 4 broader transactions or arguments which are available, which all of us are fighting at High Courts, at Supreme Courts, at GST appellate authorities, and hopefully we will have a resolution and light at the end of the tunnel soon. Till then, what all we should be doing, that we, if at all, we don't want it to litigate aggressively, pay tax under protest, and claim that refund within 2 years, because beyond 2 years you cannot claim the refund. keep your claim live. Keeping your claim live is the must thing, because eventually if it is decided in favor of the assessee, and if you not have paid tax under protest, keeping your claim live, that money once paid is lost forever. You will not be entitled to claim any refund beyond 2 years. This is where that we should be really working out. These are all relevant judgments that we should be mindful of and effectively be looking at it at this point in time. So thank you very much. I'm sure there will be some questions and we can take up those questions now.
How do you keep it alive?
By filing refund claim.
Refund.
Okay, I think good news that I was so clear that there is no question. Yes, please.
So there's a new issue with the GST on premiums and services that you pay to the BMC and MCHI.
That is also pending. We believe that we have Article 243W exemption available. There is no GST payable on the charges paid to BMC or Navi Mumbai Corporation or Thana Corporation. No need to worry, but the petitions are pending even on that point of time. Yes,
What is the view on units given to slum dwellers in case of SI?
same, it's area given, same thing.
There is a separate notice, October 23 notification.
That is an interpretation issue, one can take up that issue, but it is still highly debatable.
What should be our course of action on PAAA for society members or tenants?
This is what exactly we discussed. This is transaction 2. The area given, it relates.
What should we pay on presently in protest? Or
That
should
is
we
up
not?
to you. As if you want to go strictly by law, then 5% of a market value. But if you want to do some structuring, pay 5% on some cost of construction, reckoner price, you can do all of this permutation. But not paying tax till it is set aside or held to be unconstitutional is extremely risky proposition for sure. Yes.
The amount that are paid to BMC towards fungible premium or TMC towards ancillary FSI, what is the
No GST under Article 243W. There is an exemption.
in the form of an FSI
Yes.
purchase?
Yes.
Instead of development agreement, if I enter into agreement to sale for the consideration, constructed consideration, still the first
What
transaction.
happens typically when you enter into an agreement to sell, but you also want to have a rights to develop. You want to have a rights to enter the property. You also want to have all the permissions can be taken in your name. All of this will be effectively provided in the agreement itself. They will say, well, only by name change, what are you doing? It is nothing but transfer of development rights.
Frankly speaking, principally it is actually sale of land.
I agree. That's
Subject to, instead of money, I'm paying constructed area and it is not converted into conveyance only because the area is yet not ready.
Absolutely.
Practically
Absolutely
speaking.
on that, and that is what we are arguing. That is what I say. If you see my arguments, you've seen the first argument itself, right? It is land or immovable right. Exactly the same argument. That you cannot break a transaction of sale of land into two parts. That for intervening period it is development rights and eventually it is sale of land. You cannot do that. But as of now, that has not been understood.
On the same page, I agree, on the same page. Government is taking advantage that you have written the word development right, sale of development right. So it's a service. So I say that it is not development right, it is agreement to sale of land. So now how can they argue?
You can do all of this, but eventually your substance in the agreement will be that you are getting the rights to the intervening period. Look at the substance. See, today we have all read the judgment of JSW last week, right, or early this week. It is all the smell test. Supreme Court or the High Court judge will look at it. He said, "What are you doing? Right? Don't get into change of form. Look at the substance of the transaction. We are arguing your all points. You are absolutely right. But that is not appreciated. Merely changing the terminology and keeping everything the same. We have a problem.
Sir, I'm a developer. I'm in this business last 45 years. Originally, we used to enter into agreement to sell only. There was
Yes.
no concept of development
JDA.
rights till ULC came.
Yes.
Because of Urban Land Selling Act, we had to get into development rights. The concept of development rights came due to ULC.
I agree.
Originally, the term was agreement to sale of land for money or for constructed consideration.
I am with you, sir. Please don't listen. I am with you. I am saying it is sale of land. Arguing it me will not help. We are all arguing together in the high court.
Yeah, what if a developer sells 70% of his inventory after OC in a joint venture?
So proportionately you are liable to pay GST to the extent of 70% of inventory.
In the RCM, you mean in the reverse RCM?
Yes.
Okay.
So
Even if the
post,
first flat was sold in the market value
Doesn't matter. On that value, proportionately it will get calculated.
on the first transaction was sold before the OC.
Yes.
so post OC, if no TDR is purchased in the project, does it make any difference in terms of liability?
You have to look at it qua you and the landowner. What is happening with the TDR, whether you are buying or the. Please don't.
We are not buying, we are not
Don't
loading.
go by the Nagpur judgment, please. I am telling you, this is not setting the correct law. We have seen, is that the judgment? Is it a transfer of development rights or a TDR? No. What is contemplated under GST law is not a TDR, it is contemplated of transfer of development right, not transferable development rights.
So in an area share, when a landowner should be charged GST
OC.
at the relevant last sale value.
No, on the area share on the first sale value, but pay GST at the OC. Okay, I think thank you very much. It was pleasure speaking this evening. Thank you.